Hello, everyone. Excited to welcome you to today's live session where we will be delving into the fascinating world of financial markets and technical analysis. Buckle up because we are about to embark on a thrilling journey to uncover trading opportunities and chart our path to success. Now, let's start with our daily routine by confirming that we are good to go this morning. So, I would like to see some comments in the comment section. If you can see my screen, you can hear me loud and clear. Please type in hi in the comment section, as this will confirm that we are good to go this morning. So, please, I would like to see some feedbacks in the comment sections while I try to load up my chats. So let's see what we have here. Let's confirm that we are good to go. Please, I would want to know if the sound is distorted. If it's distorted, please let me know in the comment section. I've tried as much as possible to make things a little bit better for us this morning. So let me know in the comment section what it is looking like. All right, so what do we have here? Okay. All right, I see your comments. 281, thank you very much. 221, thank you. 221 wants to ask a question. Please do right away. Let's see what you have there, and I hope I will be able to answer them appropriately. Hello, Jorita. How are you doing this morning? Good morning, and thank you for checking in on us. Good morning, 454. All right. Okay. So with this handful of feedbacks, let's assume that we are both on the same page and that the visuals and sound quality is quite good. So on this note, I welcome you all once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola. And for the next 1 hour, I'm going to be your host, where we shall be delving into the current market structure using simple parameters such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of all of the assets on our watch list for this week. Well, since the beginning of the week, we were able to deliberate on 3 assets yesterday, and due to time, I wasn't able to take you through what I have on my watch list, but I hope that time will permit us today so that I can deliberate further and give you one more pair into our arsenals for this week. So far this week, we have been monitoring the we've been monitoring the XAUUSD, which is popularly known as the gold spot. We have the USOILSPOT, and of course, we also have the XAUUSD, which is popularly known as the gold spot. So I do hope I will be able to include the USDJPY, as it has been doing pretty well for me and my team here, but let's see how things will go today. So for those who are joining us for the first time, you might be wondering what is really happening here and what are you doing here. Well, let me quickly take you through this. We are technical traders and we gather here on a daily basis in anticipation of the New York session, where we come to review our existing positions if we have any, manage our position, while we also strategically position ourselves in such a way that we can capitalize on potential opportunities during the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So I encourage you to stay tuned in so you don't miss out on any of these insightful ideas we shall be deliberating on today, and try as much as possible to be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how this works, and eventually be able to use the information you have gathered here to make your own independent trading decisions. So once again, you are all welcome. So with that being said here, let's run through our morning routine. So the first thing we normally do is to check on the economic calendar. And for those who have been with me for a while now, you know how important this economic calendar is, as these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that is needed to position ourselves in such a way that we can capitalize on any move prior, during, and even after the event. So, on the economic calendar, we normally focus on high impact events from the economies on our watch list. And so, for this week, we have been looking at the US and the Japanese yen economy. Now, if you look at this structure here, hold on a second. I'm trying to figure out what is happening here. Okay. So, for today, um, Wednesday, 27th of September, we do not have any high impact events. So I took it a step further to include the medium impact event. I'm trying to sort that out. Okay, so here we go. So I tried to include the medium impact event, and that revealed that we have some economic features that could incite some sentiment in the market, which of course will be driving price action. Now, for today, Wednesday, September 27th, we have from the US economy, we have the durable good order, which is coming up in about 2 hours from now, and everyone in the market will be looking forward to this event. And for those who don't know what the durable goods order are, this is released by the U.S. Census Bureau, and it measures the cost of orders received by manufacturers for durable goods, which means goods planned to last for 3 years or more, such as motor vehicles and appliances. And in fact, this index is a sensitive data to the US economy. It's a sensitive figure that gives us an insight into the US economic situation. And generally speaking, the final figure shows the state of US production activity, and a high reading is considered as positive for the US economy, which will dovetail to some sentiments in favor of the US dollar. Now, the previous data that came in for the month of July was minus 5.2%, which was not an encouraging figure at all. And economists are projecting that we are likely going to be having a minus 0.5%. And what this simply tells us, considering this expectation, is that there seems to be some level of expansion in that economy. And that is why economists are projecting a much more higher figure compared to the previous data. So what we are going to be doing here is to look forward to see what the actual data is going to be like. Is it going to be just as expected, below expectation, or probably surpass all expectations here? Then we also have the durable goods order excluding defense. We also have for the one excluding transportation. Then we also have the non-defense capital goods order, which exclude aircraft. So these are the major events we are going to be looking forward to today. And of course, as technical traders, what we are going to be doing here today is to sniff through the current market structure to look out for patterns and structures that will help us position ourselves in such a way that we can capitalize on any potential opportunity prior to this event. Now, let's go into the chart right now to look at things from a technical standpoint. So the first asset we are going to be looking at this morning is going to be the US All Spot. And in fact, the US All Spot has been doing pretty well since the beginning of the week. And in fact, the last 24 hours was nothing short of a spectacular bullish momentum, as you will see here. And I do hope you all took advantage of this opportunity. And if you are done, you have nothing less than about 300 pips in profit, as we had multiple entries on this one. Now, before we go into the details of what things are looking like right now and how we intend to position ourselves ahead of today's trading session, I would like us to run through how the week started for us here in this community and what led to the idea of buying this asset yesterday. Now, I showed you here yesterday that since the beginning of the week, I had an opportunity of selling the US All Spot after observing a consolidation phase where price was initially confined within the $90.10 level and the $89.60 area, as you will see here. And of course, whenever we see such flat channel, it further emphasizes the level of indecision in this market at this point in time. And whenever we have the situation, what we normally do in this community is to exercise patience, where we look out for either a breakout of that range for buying opportunities or the breakdown of that support line for selling opportunities. And of course, what we saw here was quite interesting, as we saw price break down the structure, did a couple of or multiple retest of that area to incite this bearish move. And in fact, we had a couple of more entries as price broke down key structures such as the $89.30 level. As you will see here, we added more positions here, added one more at the breakdown of the $88.95, and of course the $88.50 area before the bullish momentum began yesterday. And one of the things we talked about here yesterday was this. We talked about the potentials of buyers coming in at some point, and we even analyze the potentials where sellers could come in and how we intend to capitalize on that one. And as a result of the bearish expectation, we were looking at adding more position if price at any point in time breaks down the $88 level, which of course, as you know, never happened. And in anticipation of the other scenario, we were having this descending trend line as our yardstick to guide our trading decisions yesterday. Now remember, we talked about this bearish trend line after connecting the series of lower highs, and we concluded that we are going to be using this trend line as a yardstick to guide our independent trading decisions. And one of the things we said here yesterday is that as long as price remains below the descending trend line, we continue to look out for structures and patterns that support the idea of selling, and that we are not going to be buying unless price action breaks out and retest the $89.30 level to capitalize on that bullish move. Okay, I think it was around here, sorry. We looked at the $88.95 area, and in fact we saw what happened. Price broke out of that structure, and in fact, if you had missed out on that opportunity, price came back to retest the structure, giving us the privilege to be part of that bullish move. And remember that we had multiple entries on this one, as we identified levels such as the $89.30 area. As you will see here, we said we were going to be adding more positions at the breakout of that structure. We also added one more at the $89.60, and we also added one more at the $90 area. And of course, price continued to climb to the upside, whereby giving me more opportunities to maximize on this one, but we shall be talking about that in a moment. So the $90 level was the highest point we talked about yesterday, where we said we will be adding more positions. So at this point in time, you should be having a minimum of 4 positions running in profit right now. And for those who still have a buy position running at this point in time, you indeed want to be moving your stop loss accordingly to secure this current buy position. And from the look of things at this juncture, I will be suggesting that anywhere around the $90.40 level, of course, you know that we want to be giving enough room for price action to break. So anywhere around the $90.50 level and the $90.20 area seems most appropriate to place all stop losses on all of our buy positions at this point in time, while we wait out to see how the market will be reacting to the levels above. Now, with a well-secured position at this juncture in the market, what is going to be our next line of action for today? What are our plans? Are we going to be seeing an uptrend continuation to the upside, or are there chances that sellers could take over this market at some point to push price to the downside? So we shall be talking about that in a moment. However, before we go into the details here, I would like us to scale up into the higher time frame to see what things are looking like from an holistic standpoint, after which we shall be back here again on the 1 hour time frame to make a well-informed trading decisions for today. Now, in that regard, I want us to scale up into the 4 hours time frame, where our analysis began for this week, and look at what we have here. Now, on the 4 hours time frame, I laid emphasis on the fact that the price action has been on a strong bullish momentum. So what we did here was to take into consideration the nature of price action since mid-month of August, and in that regard, we had a beautiful ascending channel to work with. And after connecting the series of higher highs, as you will see here, we have the resistant line of the ascending channel. And after connecting the series of higher low, we had the support line of that ascending channel. However, during the first day of this week, we saw how price did break down the support line, giving us an idea that sellers might likely take over the market. But one thing we noticed here yesterday is how the $88.50 level became a barrier for sellers. And if you are with us during the live session yesterday, I told us all that this $88.50 level is a crucial moment in this market, as anything that happens here will determine where price is likely going to be heading to. Now, one of the things I talked about here is how this area had the $88.50 level had been a major role in determining buying pressure in this market. We saw how sellers struggled around this area. We saw what happened here on the 15th of September. We saw what happened here during last week trading session. We saw how sellers found it difficult to break through that area. And in fact, during the early days of this week, we saw the same thing happen around this area. And what this simply tells us is that sellers are always finding it difficult as soon as price gets into the $88.50 level, which simply means that participants in this market are finding the US oil commodity cheap enough to buy at that juncture in the market. And as a result of this, I told us all yesterday, a breakdown retest of the structure is all we need to be part of a sell move, which of course never happened, and that if buy pressure resumes back above the structure on our lower time frame, we shall be part of an uptrend continuation, which is why we are in the buy position we are right now. Now, another key factor about this zone, which is very important that we take note of, is the fact that price has been consolidating since the second week of this month. As you will see, price has been trapped within the $91.50 level and the $88.50 area to emphasize the level of indecision in this market. And of course, when price is caught within a range, it is very, very important that we remain patient, waiting for either the breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. Now, look at the structure closely. Let me zoom this in a little bit so we can see things more clearly. Now, look at the structure at the beginning of last week's trading session. We saw, though price found a new high, in fact, this is the highest point price action has been since the beginning of this year. That is the $91.50 level. Now, the way things are going right now, it appears price is gradually approaching that structure. And the question at this point in time is, will the price break out of the $91.50 level to incite another wave of bullish momentum, or are we going to be witnessing the same barrier we saw last week to negate all buyers' attempt and then push price to the downside? Now, to have a better perspective into what is going on here, we would want to scale down into a much more lower time frame. Now, scaling down into the 1 hour time frame, let's zoom right into the structure. Now, this is the $90.80 level that we identified yesterday, which we also said we were going to be. Okay, this was this morning, sorry. So this morning, while I was trying to decipher what the market is going to be doing this morning, I was able to identify this level at the $90.80 area. And one of the key things about this level is this. If I zoom out right now and go to as far back as last week's trading session, you will see how the $90.80 level had played a major role in determining the direction of price action. It was initially a buying niche at some point. Look at what happened here. It was a buying niche which led to that price testing the new high. And then we saw price break down the structure here. We saw selling pressure since last week Wednesday. As you will see, buyers have been finding it difficult to break through that area. And in fact, this also happened last week Friday, as you will see here. And right now we have a breakout of the structure. So because of the scenario here, I placed a buy stop order again above the structure. That is, if price breaks out of that structure, it will be a beautiful opportunity to join. And for those who took advantage of that one, well done to you. Kudos to you for being on standby to capitalize on that one. So now that we have this going right now, for those who had missed out on this opportunity, well, I will be advising you at this point to exercise patience. Let's see if the market will give us more opportunity to join this uptrend scenario. And of course, we know that from a technical standpoint, when price breaks out of a key structure such as the $90.80 level, there are chances that price will at some point in time come back to retest the structure. And if that does, then the market has been so kind for us to be part of the second wave of the bullish momentum, where the further breakout of the $91.50 level will be welcoming more buying opportunities. So let's see how the market is going to be reacting to the structure. Are we going to be having a retest of structure? If it happens, we get ready to add more position or join if you are new with us, and then look out for more opportunities at the breakout of the $91.50 zone. Now, in as much as we're looking out for buying opportunities here, we cannot ignore the potentials of sellers. Of course, we can never ignore the potentials of sellers. This area has been a strong selling niche in the past, and it is very likely that the breakout we are witnessing here could still turn out to be a false breakout. Now, for those who have a buy position running at this point in time, that is why I told us all to secure all buy position, as anything could still happen. Sellers could still come in to take over this market. Now, for us to capitalize on any bearish momentum, in fact, to even help us guide our trading decisions today, we have a trend line we need to mark out on this chart. Now, if you look at the structure since yesterday's trading session, you will see how price had continued to find higher lows. As you will see here, we have higher lows here, we have higher lows here, signs that buyers are gradually gaining momentum. And whenever we notice higher lows like this, we want to be marking out those levels, as we will be needing it as a yardstick to guide our trading decisions for today. So I will just mark out this level right here. Okay, what's happening? Okay, so I would like to give it a green color to differentiate it from the previous line. So this is the trend line we shall be using to guide our trading opportunities for today. So as long as price remains above the trend line, we feel comfortable in our buy position, while we also look out for more structures and patterns that support the idea of buying this asset. However, if at any point in time price breaks down the trend line, it would also have broken down the $90 area, and a breakdown of this trend line could signal that the trend line may no longer have the capacity to continue to negate that bearish attempt. Now, if this happens, breakdown of structure, we scale down into our lower time frame to look out for confirmations such as retest of structure, where we see signs that buyers are finding it difficult to climb back above the ascending trend line. Then we can be part of the crash to the downside. Now, if we look at this from a technical standpoint, really, you will see that since price broke out of that descending trend line yesterday, from a technical standpoint, we expect that at some point in time, price may likely come back to retest the trend line that was broken yesterday in anticipation of the uptrend continuation. So because of this expectation, we might likely be seeing a crash. If the price drops below the ascending trend line, then we get ready to sell into this area, which will be dovetailing to a minimum of 250 pips to catch there if price really dropped to the downside. But at this point in time, I doubt if that will happen. But if it does happen, we really do want to be part of that move to the downside. So you can see how important both the ascending trend line and that level at the $90.80 area is going to be a major factor in determining what our next line of action will be for today. So if you I would suggest that you mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. So at this point, if you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into the next financial asset. All right. So, in the absence of no questions, I want to assume that we are all on the same page here. So, we shall be moving right into the next financial asset on our watch list. So, the next asset on our watch list for today is the USTech 100. And on the USTech 100, we have quite an interesting position at this point in time, as we, despite the expectations that buyers might likely take over this market, we saw price finally broke down that temporary demand zone we identified yesterday to insight a selling opportunities. Now, before we go into the details here, I would like to take you through what really happened in this market and how the week started and what led into the idea of selling this asset at this point in time. Now, the first thing we did here at the beginning of the week, I shared with you what was really going on in this market. As you will see, that price was initially consolidating as we saw price action confined within the 14,765 and the 14,650 for over 18 hours. I think about 24-36 hours this was, has which further emphasized the level of indecision at that point. Now, there's something interesting that happened around this area which further gave us a clue into the potentials that buyers could come in at any point in time. Now, we saw what happened here since the beginning of the week. We saw how sellers were struggling around the 14,650, as you will see right here. Every attempt by sellers to break through the structure has been met with strong resistance from the buyers. And actually, when we saw this yesterday, I was of the opinion that the chances of buyers coming in is gradually increasing at this point. But I told us all that you know how we use our flat channel whenever we identify them. That is, when price is caught within a range like this, we normally expect price to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. Now, one of the things we noticed here yesterday was that price was around this area, as you will see, around this area yesterday. And if we consider the distance between where price was at this point and the resistance line, it was about 80 pips. And I said, okay, fine. If this is going to be the case, I would like to maximize the potential of this bullish move by joining even before the breakout happened. And if the breakout finally happens, we want to be adding more buy positions. And as a result of this awareness, we were able to identify a level at the 14,710 area, where I told us all that a breakout and retest as confirmation will be welcoming that buy positions, where we will now be having a buy stop order above the 14,765 zone to maximize the potential of that move. But unfortunately, that never happened, as you will see right here. And one of the things we said yesterday is that if this does not happen and price continues to drop, then we will need price to take out all the buy positions around the 14,650 to give us a confirmation that sellers are likely going to be pushing price to the downside. And of course, we saw what happened here. A couple of hours into the New York session, we saw this huge engulfing bearish candle slicing through the structure. We saw price came back to retest that zone, and price rode all the way to the downside into the 14,500, giving us about how many pips was that? About 130 pips before this bullish momentum began. And of course, you know how we do it in this community. When price action falls into a range like this, we want to be exercising patience. If price falls into this kind of scenario and price moves significantly well in our favor, we do want to be moving our stop loss accordingly to lock in some profit. Now, and if you had done that appropriately, you must have been taken out of your position with a moderate size of profit at this point, or at a worst case scenario break even. Now, with this situation we have right now, what is going to be our next line of action for today? Well, I still think that some of us will still have a sell position running, especially those who had placed their stop losses at the entry zone at the 14,650. If you do have your stop loss in place, very good. Let's see if the market is going to come back and retest that structure to incite a trend continuation to the downside. Now, well done to everyone who took advantage of this bearish momentum yesterday. Now, with the situation we have here right now, what is going to be our next line of action? Are we going to continue seeing selling pressure, or are there chances that buyers could take over this market, where the breakdown of the 14,650 could turn out to be a false breakdown? Now, before we go into the details here, I would like us to run through the higher time frame, like the 4 hours time frame, where I would like to, I think it's the daily time frame in this case scenario, where I would like to refresh our memories on what is really going on in this market. Now, one thing we observed here on the daily time frame is the fact that price action has been on a very, very strong bullish momentum since the beginning of this year. And if we do it correctly, connecting the series of higher lows gave us a beautiful ascending trend line, which was finally broken last week trading session, as we saw price break down that trend line and the 15,150 area during the course of last week, as you will see right here. Then it brought price back into that demand zone, which we identified had the 14,650, as you will see right here. So we had a demand zone here, which has a strong memory for buying power in this market. Now you can see that every time price comes into the zone, we saw how buyers came in, negating all attempt by the sellers to break through that structure. Now, right now, price is back into that zone, making it seem that we are at a crucial juncture in this market, where, depending on whatever happens around this area, has a chance of dictating where price will be on a long term. Now, one of the things that we are likely going to be seeing around this area is, if selling pressure persists here, a breakdown of that demand zone, taking out all the buy position here, will be a beautiful opportunity to join a downtrend scenario. However, there are still chances that buyers could still gain back their momentum, leading into a situation where a bullish momentum begins one more time. Now, for us to have a better perspective into what is really going on here, we were able to scale down into the 1 hour time frame to look out for patterns and structures that will help us guide our positions for this week. Now scaling down into the 1 hour time frame, we spotted this range, and right now price has broken down that temporary demand zone around the 14,650. Now from a technical standpoint, when price action breaks down a key structure such as this 14,650, there are chances that price could come back, retest the zone that was broken to incite a trend continuation to the downside. This is a very beautiful expectations here for us to join a downtrend continuation. However, if price does the opposite in this case scenario, breaking back above the 14,650, then of course we will be back within the buyer's territory. As you all know that since the beginning of the week, the zone here has consistently held buying pressure, negating all attempt by the sellers to break through that area. So if price will climb above this area, then I want to consider this as an opportunity to start considering buying, where the retest of structure on our lower time frame will be a beautiful opportunity to join an uptrend scenario. So this is what we shall be looking out for here today. So you can see how important the 14,650 level is for us at this case scenario. Now, another thing I would like us to talk about here is the fact that since last week's trading session, price action has been on a strong bearish momentum, and in fact I want to go to as far back as last week Thursday, as you will see here that we have lower highs, which of course we do want to be connecting to give us a sense of direction of where price is likely going, and that is to the downside. And as long as price remains below that descending trend line, we shall continue to look out for patterns and structures that supports the idea of selling. And interestingly, this descending trend line here shares a beautiful confluence with that 14,650, as you will see here. So I'm still looking forward to price coming back into the structure, and if buyers find it difficult to break out of the 14,650, then we look out for patterns like double top structure, reversal patterns, continuous selling pressures, or lower highs and lower lows on our lower time frame to join that bearish move to the downside. However, if price breaks out of the 14,650, then at the same time price would have also broken out of that descending trend line, which will happen to be the first time price will be breaking out of that structure in the last 1 week. Then a breakout of that trend line will definitely be a signal that the trend line may no longer have the capacity to continue to negate the bullish attempt, and this will definitely be a beautiful opportunity to capitalize on an uptrend scenario where the breakout retest of structure will be a good confirmation to join the uptrend continuation. Then this will now turn out to be a false breakdown if this breakout of the descending trend line happens. So the trend line and the 14,650 is going to play a major role in determining what our next line of action will be. So let's see if the market will get close to the 14,650, where depending on what happens around that area will determine if we are going to be buying or selling this asset. However, if price does not go that far and instead it continues to drop to the downside, then if you look at what has been going on here, in fact, I would like to mark out this level right now. That's the 14,500 zone, as you will see here. So we have the 14,500 level. That's a strong psychological area considering the round figure of that price. So we have the 14,500, as you will see right now, which is the lowest point price has got into this week. And of course we do want to be hold on a second. So we do want to be looking out for more selling opportunities below this area. However, we could still take advantage of selling again even before the breakdown of that structure happens. So as a result of this, if we bring out our line charts, you will see that we have a temporary bullish trend line here, as price had consistently found higher lows since the later part of the New York session yesterday. Now, if price will break down this trend line, let me adjust it a little bit so that I can suit the pivot lows here. Now, if price will break down that descending trend line and the 14,000, let's see, 14,600, I think. In fact, I need a breakdown retest of the 14,600 for me to be joining any sell opportunity here. Then we look out to add more position if price goes on to break the lowest point there. So let me mark this level out on our chart, as we will be needing it as a reference point. So a breakdown retest, mind you, we are not having a sell stop order here. We want to see the breakdown happen, retest of structure confirming that sellers are getting stronger. Then we can have a sell stop order below the 14,500 to maximize the downtrend scenario here. So these are my views on the US Tech 100. I do hope I made myself very clear. But if you feel that you need more clarifications here, or you need me to expatiate on a particular idea, please feel free to let me know in the comment section. Trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we jump into the next position. All right, so I see your comment 4974905572206. I see your comment, Jorita. Glad to have you around. You're welcome. And I saw Queen GPT. All right, thank you very much. So, in the absence of no questions, I want to assume that we are all on the same page here. So, permit me to move right into the next financial asset on our watch list. So the next asset on our watch list for today is the XAUUSD, my favorite, popularly known as the gold spot. In fact, we have a very simple setup on the XAUUSD, and since the beginning of the week, we have been selling and selling this asset. Right now, I have a minimum of how many positions running right now. Remember, I told us all yesterday that we took advantage of this breakdown of the 1922 level, 75-cent area, added more positions at the breakdown of the 1915. We had the 1913. We also had the breakdown of the 1910. We also had the breakdown of the 1902, and yesterday we talked about breaking down, selling the breakdown of the 1900, and as at this morning I added one more, had the breakdown of the 1895. So we have about 1, 2, 3, 4, 5, 6, 7 good positions running in profit at this point in time. And in fact, if you are taking only one position, you will have about 290 pips running in profit on just a single move, let alone having this other positions running at this point. So congratulations to everyone who has been part of this profitable journey. Now, for those who are not part of our live session yesterday, I would like to take you through what led to the idea of selling and then talk about what our next line of action will be for today. Now, if you look at the structure here from a technical standpoint, it is quite clear that the US dollar is gaining strong momentum following the expectation that the Federal Reserve is going to be raising interest rate one more time before the end of the year, and a lot of people wants to be investing in the US dollar at this point in time, hereby increasing the demand for the US dollar. And of course, when the demand increases, prices rises, and the gold at this point in time doesn't seem a promising safe haven asset at this particular point in time yet. Now, at the beginning of the week, from a technical standpoint, I told you how we spotted this range here where price was initially confined within the $1,926.50 level and the $1,922.75 area, giving us an insight into the level of uncertainty at that particular point in time. Now, you know how we do it in this community. Whenever we have a range like this, we have no other choice than to exercise patience, waiting for either the breakout or breakdown of that range for trading opportunity. And of course, we saw price break down the support line, and it was at this point we begin to sell the XAUUSD for this week. So that is how we got the idea of selling this asset. Now, during our live session yesterday, I emphasized the importance of this descending trend line, and that as long as price remains below this descending trend line, we shall continue to look out for more opportunities to sell. And during our live session yesterday, this was where we were. Hold on a second, let me find that out for us. So during our live session yesterday, all right, so this was where we were during our live session yesterday. We were around the $1,913 area, exactly around this area that price was during the live session. And I told us all that we are going to be having an opportunity to sell if price breaks down the 1,910. And if you are taking advantage of that one yesterday, you should be currently running with over 160 pips in profit. And if you also added more positions, like I said, had the 1,900 level and the 1,895, you will be having more positions on this one. So congrats to everyone who has been part of this profitable journey. Now, you know how we do it whenever price had moved significantly well in our favor. You do want to be moving your stop losses accordingly. Secure these current positions while we wait out for more opportunities to maximize this bearish momentum if the market will permit us to. Now, to secure all positions at this juncture, I will be suggesting that anywhere between the 1,900 and the $1,902.50 level seems most appropriate. Of course, you know that we need to give enough room for price action to bring, but it's okay. Let's see how the market will react going forward. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? Are we going to continue selling the XAUUSD, or are there chances that buyers could come in at any point in time? Personally, I told you that I already have a sell position, another sell position triggered at the breakdown of the 1,895. Busy. At the 1,895, as you will see right now, price has broken down that structure. And what I want to be doing right now, if you had missed out on this opportunity, I will be suggesting that you exercise some patience while we wait for further confirmation that sellers are really going to be pushing price further beyond the zone to capitalize on more selling opportunities. Now, one thing you are going to be doing here now, right now, is this. It's either we wait for a retest of the 1,895, where if continued selling pressure happens around this area, then we can join that bearish momentum, or we could have a scenario where price will climb back up into the 1,900, where continued selling pressure around this area will incite more selling opportunities. And then we also have the 1,902. Price could still come into this area to incite a sell-off. So you do want to be marking out these very important levels, that is the 1,895, the 1,900, and the $1,902.50 level for selling opportunities. So if price climbs up at any point, comes into the zones or levels, then price continues to reject that area. As you see, buyers continue to find it difficult to climb above, then we want to be getting ready to sell. However, if price does the contrary in this case scenario and breaks out of the $1,902.50 level, it's at this point I would like to start considering buying that asset. Now look at this structure here. But I doubt if this will happen today. I don't think it will happen. But if it will happen, we have no other choice than to start looking out for a potential reversal pattern around this area. Now, if we are going to be buying the breakout retest of the $1,902.50 level and price continues to climb up, remember that we have a descending trend line here, which has been a major parameter that has been supporting this bearish momentum here. Now, if we buy above the $1,902.50 level and price continues to climb higher, I'm suggesting that as soon as price tests this descending trend line, we do want to be moving all our stop losses and secure that position, and then wait to see how the market participant will be reacting to that price zone around that trend line, which falls around the 1906 1905 area. Now, depending on what happens here will determine if we are going to be adding more buy position or get ready to sell. Now, to add more buy positions, we want to see price break out of the trend line, the 1905 1906 area, retest of structure, then we could be adding more buy positions at this juncture. However, if price gets into the trend line and buyers find it difficult to break through and continue selling pressure persists here on our lower time frame, then we shall be getting ready to join a bearish momentum to the downside. So this is what we are going to be doing on the XAUUSD for today. So let's see if market will get that far. But if it doesn't and it continues to drop, then we have our self position below the 1895 to continue to hold on to that bearish momentum. So these are my views here on the XAUUSD. If you have any questions whatsoever as regards to the current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever. Let me see. I'm already out of time here, but I could still squeeze one more pair which I wanted to share with you, and that is on the USDJPY. Let's see what happens anyway. So if you have questions, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds, and then you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So let's see if I can run through the USDJPY quickly. So I'll just run through the lower time frames and let's see what we can do here. So the next asset on my watch list for this week actually is the USDJPY, and interestingly, I have been buying this asset since the breakout of the 148.500 will happen at the beginning of the week, and in fact I have a minimum of 3 positions running at this point, as I added one more here and one more at the 149.150. Now let's run through the higher time frame quickly. Let me share with you what I saw in the higher time frame and what led to the decisions that I am making on this asset. Now, before I go into the technical details of what the structure is looking like, I want to share with you some fundamental factors that have been affecting this market in the last couple of months. Now, if we scale up into the daily time frame here, hold on a second, please. I want to show you something. Okay, so on the daily time frame, it is quite clear that price action has been on a strong bullish momentum since the beginning of this year. However, as soon as price, let me zoom right in, as soon as price got into that area above or within the 145.00 area and the 147.500, we saw this whole scenario of a choppy scenario. Choppy situation. This is no ordinary zone. Let me tell you, it's a territory where the Bank of Japan made a significant intervention last year, and the looming fear of another intervention has cast a shadow of indecision over the past month, and this uncertainty has reflected on the chart and manifested as a consolidation phase amidst a resilient US economy. Now, here is where the thing gets intriguing. Recent development emanating from the Bank of Japan have tilted the scales in favor of the US dollar, where the Bank of Japan governor has said that the ultra monetary policy will not be abandoned at the moment, and that if there's going to be any abandon at this point in time, it's going to be subject to economic data. And from the look of things, the economic data coming out from the Japanese economy hasn't been quite interesting or hasn't been quite inspiring at this point in time. And in fact, from a technical standpoint, it is quite clear that though we have a consolidation phase, within this whole consolidation phase, price had consistently found higher lows in this market, which further emphasized the strength of the buyers within this whole area. Now, as a result of this, I had a key level for this week situated at the 148.500. In fact, remember, we have been buying the USDJPY since last week's trading session, and the 148.500 for me was an area I want to be looking out for more opportunity. That is, if price breaks out of that structure, definitely I want to be getting ready to buy. Now, if we scale down into the 1 hour time frame, we saw how market participant reacted to that zone. So let me zoom right to the 1 hour time frame for you to see what I saw here at the beginning of the week. Now, at the beginning of this current week we are in right now, you will see, hold on a second, let me just grab this for you. So at the beginning of this week, it was quite a simple setup that we had here, as we saw price confined within the 148.500, that is our key level for this week, and then the 148.260. And of course, you know how we do it here. When price falls into this kind of flat range, we have no other choice than to exercise patience, waiting for either the breakdown of that range to give us an opportunity to sell, or the breakout of the range to give us an opportunity to buy. And obviously, as you can see here, price broke out of the 148.500 to trigger my first buy position for the week. And it appears that things are getting stronger by the day as price continues to find higher highs and higher lows along the line. Now, this morning I had a beautiful resistance line at the 149.150, which was initially this morning the highest point price action has gotten to so far this week, and I was waiting for the breakout retest of this level to add more buy positions to my existing trade. Now, if you see what has been going on in the last hour, we finally saw the breakout of that 149.150, and in fact I had a buy stop order above that structure to capitalize on that opportunity. Now, for those who had missed out on this opportunity, you would have no other choice than to exercise patience, where you want to be seeing price come back to retest the structure where the appearance of buy pressure again on the lower time frame. It could be your 10, 5 or 15 minutes time frame, after which you want to be joining that uptrend continuation here. So let's see if the market will come back and retest that zone, and if it does, we want to be capitalizing on that move. Now, for us to guide and make things a little bit much more easier, we have an ascending trend line, which I spotted here. So this is the red dotted line you can see on your screen right now. But I would like to there's a deviation to that ascending trend line, ascending trend, as you will see here. So if I bring out my line chart at this juncture, you will see that we have something like this. Hold on a second. You will see that we have something like this. Okay, so we have something like this. So there is a deviation to that trend that we have here. So it's likely we have a couple of ascending trend lines here so that we can capture what things are looking like right now. So I'll make this one the major one, thicken it a little bit, and then bring back our candle chart. Now look at what we have here. So since the beginning of this week, you will see price has been finding higher lows, as you will see right here. Higher low, we have a higher low here, higher low here, and then we have another one that happened here during the early hours of this morning, and then we also have another one which happened about 3 to 4 hours ago, leading into the situation that broke out of the 149.150. Now there are still chances that price will could drop into the trend line. So if sudden momentum comes in, there is no point panicking, as we have a bust up around this ascending trend line where the appearance of buy pressure again could incite an uptrend scenario. So that is why you do want to be having a wider range of stop loss for those who are taking advantage of the breakout retest of the 149.150, having your stop loss right below the ascending trend line, maybe around the 148.950, which will be dovetailing to about, how many pips is that? Let me see. About 20 pips thereabout, which is not bad for this current position. So as long as price remains above this ascending trend line that we just spotted here right now, we continue to hold on to our bullish bias, feel comfortable, and look out for more buying opportunities here. However, the only condition that will make me want to consider selling the USDJPY, which I doubt will happen today, is for price to slice through that ascending trend line, break it to the downside, and in fact break down the 148.930. And if this happens, we might likely be seeing a retracement of this impulsive move we saw at the beginning of the week. As you know, we saw price break out of our week's key level at the 148.500, and from a technical standpoint, whenever a breakout of a structure happens, there are chances that price could come back, retest the structure that was broken to incite another wave of bullish momentum. Now, if price ever breaks down both the ascending trend line and the 148.930 here, we are not jumping in right away, as we will need some confirmations to happen before we jump into that sell position. Remember, the breakdown of this trend line could still turn out to be a false breakdown, considering the strong bullish momentum we have in this market. So I would like to see some confirmations that sellers are getting stronger and that buyers are finding it difficult to climb back above this ascending trend line, which would reflect on this chart as continued selling pressure below the structure. Then we can join that decline to the downside. So this is how we are going to be managing our USDJPY for today. And in fact, our center of focus is simply between the 149.150 and the 148.930, where depending on where the breakout happens is likely going to be inciting the momentum in that particular direction. So this is my view here on the USDJPY for today. Very simple setup we have here. Mark out these levels on your charts, as you will be needing them as a reference point to guide your independent trading decisions for today. And if you have any questions whatsoever, feel free to let me know in the comment section. Can I take some few seconds to see if there are any questions before I call it a day? I think we should do that right away. Let me wait and see if there are any questions. Then we can now round off for today's Extreme Speed Live session. All right, all right. So, in the absence of no questions, I want to assume that we are all on the same page here. And in fact, it has been a wonderful moment I shared with you today. And we were able to attend to four major financial assets today, which includes the US All Spot, US Tech 100, popularly known as the NASDAQ, the XAUUSD, popularly known as the Gold Spot, and of course, the USDJPY, where we were able to identify simple setups that we can use to guide our independent trading decisions for today. So I implore us to remain patient. Let's allow our structures to mature before we jump into any positions. Have an adequate risk management strategy to ensure you protect or mitigate your position against any risk that will affect your temperament. For those who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And I encourage you to be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how this works here, and eventually be able to use the information you have gathered in this community to make your own independent trading decisions. So once again, I welcome you all, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time get ready for tomorrow's trading session. Do have a wonderful evening, everyone. Bye bye.